One thing we have to understand about what's going on with the banking is this. You see, the Federal Reserve, they created this new facility that they're going to give loans to banks that they're about to collapse. They call it a bank term funding program. Now, if you remember from my previous videos, the bank term funding program is just a complete, sham. And so what they're saying to these banks that you guys are collapsing right now, and you bought all these long-term bonds and mortgage-backed securities, don't worry about it. If they're worth only 70 cents to $1, we're gonna go ahead and give you, full $1. You get a loan for a year, and we get those, bonds and whatever you have, and in turn we give you a loan for you to survive to see what's gonna happen in 1 year. Here's the problem. When this banking crisis has started, I made a video and I told all of you guys, this is tip of the iceberg. Now, there is a new report that came out. It says nearly 200 banks, they're about to collapse. So what do you think Fed is going to do? Well, one of the ways the Fed is going to basically fight this situation is they need to inject money, capital, into these banks. So JP Morgan, they were talking about this whole situation, and they came up and they say that in order for the Fed to rescue more than 200 banks that are about to fail, Fed is going to inject about $2 trillion into this new facility, so all these banks, they're able to borrow money to be able to survive. But one thing we have to understand is this, and it's very crucial for all of us to remember and understand this point. When there is a bank that is failing, in other words, the bank, they have made wrong decisions, they have made wrong bets, and they have lost money, by Fed coming in and injecting $2 trillion, yes, in a reality, everybody says, the government says, the Fed says, oh, this is not going to cost any money to the taxpayers. Well, they're lying to you guys. They're lying to us. The reason for that is where that money is going to come. If Fed is injecting $2 trillion, yes, the Fed is not injecting $2 trillion directly to the economy, which they did the past couple of years. But that $2 trillion is helping failing banks. These banks, they cannot survive without all this money. So ultimately what's going to happen is this is only and only kicking the can down the road, because what's going to happen is, okay, so let's say if these banks that they're failing, right? And you tell them, okay, now bring your, worthless bonds, okay? And then I'm going to give you 100% value to these loans, but this is only for 1 year. Ask yourself, what's going to happen after 1 year? Just ask yourself, what's going to happen after 1 year? Well, you see, the problem is here. The most important thing of any structure, any friendship, any company, any bank, anything that you can imagine, it's your foundation. I want to give you an analogy. When they are making a high rise, they are absolutely focused on the foundation, because the foundation is the one who's going to hold this building, and it is so important to take time, money, effort to make sure the foundation is completely solid. When you have a bank that the foundation is cracked and is crumbling down, what are you going to do? This is the same way if you have an arm that has a big cut and is bleeding. You know what you do? You put a Band-Aid. That Band-Aid is going to hold only for a few minutes. Then it's going to bleed again. So you have to understand that what Fed is doing, all they're doing is trying to stop the panic. And stop the panic in what way? Because people, they're looking at this whole situation every day, more and more banks, they're collapsing. So people, they don't have a trust in banks and they want to take the money out. Now, if everybody goes and they take their money out of the banking, we're going to go through a chaos. We're going to go through a financial collapse. However, what the Fed is doing, they're trying to put this money, $2 trillion, injecting into banking system so they can save them for a year, because they know eventually 90% of these banks, they're not going to be able to survive, and they're going to be gobbled up with all the big banks, JP Morgan, Bank of America, Wells Fargo, and Citibank. Now, if you want to understand how the situation is unfolding, there is another problem that is happening. Blackstone. Blackstone is one of the largest hedge funds. They have trillions of dollars that they have managing and everything else. They're heavily involved in real estate. Blackstone just announced they bought a commercial building in Las Vegas for approximately $13 billion back in 2013. They just announced that Blackstone, they stopped making loan payment, $325 million loan payment, and they said they are not going to be able to continue making loans. Blackstone, largest hedge fund, cannot make payments. And guess what? Whatever happened a few weeks ago when all these banks, they started collapsing one after another, the other thing that happened is this. People, they have investments in Blackstone. They went and they asked for their money to be able to withdraw because they don't trust Blackstone anymore. They don't trust the economy. They want to take their money out. Blackstone refused to give them their money back. Why? Because in their contract, there is a clause. It says that they have the right. So what they're saying is, don't panic, just wait. You can get your money out. And the other hand, they come and they say they cannot make $325 million payment because they can't. Because this place that they bought, which is a mixture of offices and offices and retail stores, the vacancy is 10.3% right now. So, what I'm telling you guys, all this information, first of all, to be informed about what's happening. Some of you make comments that this is a scare tactic. This is not a scare tactic. Look, if you are a person that you want to understand what's going on in the economy, you need to position yourself in the right direction. You need to be completely aware of what's going on. How do you want to invest? Where do you want to keep your money? Then you're a type of a person, you say, look, what's happening right now? First of all, I need to be completely aware and cautious what I'm doing. Secondly, this is only and only going to bring tremendous amount of opportunity. So if you know what you're doing, if you position yourself the right way, if you position yourself with the right people, you're going to make a lot of money. But if you're a type of a person that you don't know what you're doing, all you're sitting over there judging people, and you say, oh, this is a scare tactic, you know what I'm saying? And then all the videos that this guy or the other people they're doing is a scare tactic, then that's your prerogative, that's your decision. But being informed, it's very important. That's why I've been telling you guys, be careful where you keep your money. Now, if you keep your money in banks, you have to understand you have a very high risk. Why? Very simple. FDIC, $250,000, you're insured. Yes, the government says, the Fed says, we're going to bail out everybody. Well, I guarantee you there is only so much they're going to be able to bail out. And they're always looking after the big guys. They're not looking after the small people. That's one thing. Secondly, I told you guys that you should go and read about transferring your money into the brokerage accounts, something like Schwab, Fidelity. The reason you want to do that is this. Look, when you go and lend money, first of all, let me be clear. When you go open a checking account in B of A, Chase, Wells Fargo, whatever you want, you are an unsecured lender. In other words, you lend your money to the bank. What the bank does, they accumulate all these deposits. They do whatever the hell they want to do. They invest, they do whatever they have to do. So that's the foundation of banking, and this is why there's so much problems. On the other hand, when you are making a deposit in a brokerage account, the difference is that you are the person in charge of your own money. First of all, that money, it is not controlled by Fidelity or Schwab, okay? They have this money in a segregated account, okay? And these accounts are controlled by a third party. In other words, your money, it's not like Bank of America or Chase. They have an access to the money and they can do whatever they want. It is not like that at all. Your money is in a segregated account. Your money is controlled by a third person. And that third person, it's not Fidelity or Schwab. They control the entire transaction, what's happening. And more importantly, besides the fact that your account, it is segregated and it's controlled by a third party, you have an insurance up to $1.25 million in Fidelity. In Schwab, I think it's about $15 million. So they have a huge amount of insurance to make sure that your money is protected. So why am I telling you all of this stuff? For you guys to understand. If you go and listen and learn about the banking and understand the differences between the banking and a mortgage account, brokerage accounts, then you could do things that is going to protect you in the future as well. So it is important for you to understand how you can transfer your money into the brokerage account and save yourself from tremendous amount of problems that is about to come. So I want you, all of you, to understand this is not a scare tactic. This is just to inform you guys what's happening. I'm telling you, I'm suggesting that it's better to keep your money in a brokerage account versus the bank accounts. The rest of it, it's up to you. It's your prerogative. You can take this information, make it useful. You can take this information, throw it away, continue what you're doing, and see what's going to happen. As always, I want you guys to have a wonderful week and good luck out there.